Last year, the Trump administration passed a tax bill that showered the overwhelming majority of its benefits on the wealthy. This year, they're up to their same tricks, and it's specifically wealthy investors who have the most to gain. Let's say you buy a stock for $100 today. A year from now, it's worth $150. You've made $50, and that $50 is what the government calls a capital gain. That capital gain is also subject to taxes. What the Trump administration wants to do is adjust that capital gain for inflation. That means that, let's say inflation were 10% over the course of the year. $100 a year ago would be worth $110 today. So the Trump administration would then say, okay, only $40 of this is eligible for a capital gains tax. So under the current system, you'd be paying 20% on $50, which is $10. Under the new system, you'd be paying 20% on $40, which is $8. So there are three big problems with this plan. The top 1% is going to get 86% of the benefits from this tax proposal. The top 0.1% is going to get 63% of the benefits. The second concern with this tax proposal is the cost. $100 billion over 10 years, according to independent estimates. That's adding an extra $10 billion a year to the deficit just to give rich investors a tax break they don't need. Finally, changes in the tax code are supposed to be made through Congress, not through regulation in the Treasury Department. But the Trump administration knows that if they tried to pass this through Congress, it would run into a wall of resistance. This proposal is yet another reminder that beneath the circus that we see in the media every day, the Trump administration is doing real things behind closed doors, in the dark, and at least in this case, doing things to benefit the rich and powerful.